Welcome. This is the Hot Coffee Investor with an update video for 6/26/2024. All trades are taken prior to 9:50 in the morning. We're at $641.08 in capital gains slash profits today. 320.34 of that is short term. 320.74 that is long term. I took two trades today. I took an Nvidia trade for 106.50 and an SPX trade for the remainder. I did pay myself $500 of those profits, as I said I would. I said I was going to withdraw pretty much all the money, or all the money, but I decided to keep $141.08 in the account. That puts our account at $30,192.83. The Roth account value is now at $8,864.89. There's not much going on today. The data coming out for new home sales, building permits, all that stuff. It's kind of up and down. Obviously, new home sales were much slower than prior. And it was revised, but that's to be expected. I do expect a lot more homes to go up for sale soon. I think people got too much house for what they could actually afford in a recession. I do think there will be a recession. I know that's a hot topic right now, but I think we're already in it. I just think it hasn't been called one yet because didn't they change the definition of a recession? I still think that. I think I made a video on that a long time ago, last year. Probably. I think it was last year. I don't know if that video is still up, though. I did delete a lot of videos last year when I wasn't sure about making content for the channel. But I'm 100% certain about making content now, so kind of wish I had deleted all those videos because I think I deleted like 20 of them or something. But I think that we're gonna see some nasty stuff come out soon, and then the market's gonna tank. Usually, when Fed cuts rates, which they are going to do, eventually, I'm doubtful there's gonna be one this year, even though they still say there might be one. I don't think they're gonna do one this year, to be honest. I think it's going to be next year, and when that happens, the market doesn't react favorably to rate cuts. I know everyone's hoping for rate cuts, and that's going to pump the market, but I really have never seen that. Whenever they cut rates, the market goes down. Asset prices go up, however, the market goes down because when the Fed cuts rates, it's not usually because of a good thing. And that not good thing is people not spending money, and if people aren't spending money, businesses aren't making money, and thus they can't spend money for return on capital, ROC. So thus the profitability stays the same or stagnant or goes down a little bit, but the companies are still super profitable, but they just aren't growing as fast or at all. They're still doing just fine, but people want to see growth. Investors want to see growth. And when that growth isn't happening, the stock market goes down, to the expectation of growth goes down, the market goes down. So because of that, everyone's expecting, that's when the market's going to go up. I know a lot of people are saying that. I have never seen that in my entire life doing this. So I think when the Fed cuts rates, it's going to cause a bludgeoning effect in the market. In which I'll be a buyer all the way down, because when something like that happens, you really don't know where it's going to stop. So you kind of have to start consistently adding for that. But I'm going to be a buyer all the way down, while taking profits on the way down. I'm better in a bearish market, ironically, than a bullish one. I don't know why, but maybe I'm a pessimist or something. But I tend to do better in downturns for profitability wise. Not because I'm buying puts, but because I'm able to time bottoms on the day better for some reason. It's always been the way I've been. I'm very bad at buying puts. or shorting, to be honest. I'm very good at choosing when to buy calls or going long on a stock in the day, in the moment, where that is at that point. For some reason, that's what I'm good at, which is, you would think, oh, well, if you're good at that, then it's going down, you should just go towards the downside. Well, it hasn't worked out for me, ever. I'm always bullish in a bear market, and that works for me. It doesn't work for a lot of people. A lot of people just like following trends. I like going against trends because I'm good at that, in the moment. So when I buy calls or I go long on something, it's during a down move that same day or for the following week or something. I don't know why I'm good at that, but that's what I've always been good at doing. So that's what I do. That's how I make my profits. I buy into down moves, which people will be like, oh, most people will be like, oh, so you're going to lose money. Well, not for me. For most people, yes. I don't know why I'm good at that. That's usually, they call that catching a falling knife. That's what I'm good at. I'm good at catching those falling knives. I catch it by the blade with 2 fingers, like some cartoon character, some Marvel character, and I make money on that for some reason. So I would not recommend that for anyone else. I'm not making recommendations that people do that or try and figure it out. Take your time, learn movements in the market, and learn price action. I'm not talking about learning charting. Charting is absolute horse hockey from my experience. You'll make a whole bunch of money until you don't, and then you'll go negative. Charting has nothing to do with it. Now, you can look at support lines, but, and people put their stop losses at those support lines. But I've never made money doing that. I can't. I use that, where would I put a stop loss? I use those where I buy, for that day or that week. That's how I make the money. That's how I make my money, and then I buy there. That's what happened today. That's what happens pretty much every day. Hey, if I had a stop loss today, what would it be? And I wait for that to happen. Usually the stop loss gets hit. You see a lot of sales going at a certain price, but you see the stock price is actually lower than that because all these are getting filled, and then it meets there, and then you see where it goes. And that's where I make my money. I wait for that to happen. I wait for the stock price and all the orders to be separate. And that usually works for me overall. And that's when I start buying stuff. That's just me being completely honest and transparent about how I trade nowadays. And for the most part, I wait for that divergence to happen versus orders being filled because of stop losses and the information catching up to the price. And then usually the price goes down a little bit more, and then it rubber bands back, and then I make that portion where I bought here, where it kind of drops, and then it comes here, and then it rubber bands down, and all these orders are being filled here from the stop losses, usually not completely, and then I'm buying about here, and then it says I lost money, and then rubber bands back up because the buyers are there, because someone's buying it at that stop loss. A lot of people are buying at those stop losses. That's how a lot of people do this, from my experience. So, I hope y'all made money today. I certainly did, and I paid myself, and did it within 30 minutes. I didn't take any pre-market trades today or set myself up or anything. I waited quite a bit before I got into that trade. So, good trading, and I'll see you on the next one. Take care.